Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on the dollar, gold, and miners. So we did break 99.43, but again, it depends on whatever time frame you're watching, because the daily chart, the bulls bought that dip and defended this support and closed above it. It's the close of the candlesticks that matter, so the daily chart is still maintaining this support, and it is a bullish reversal hammer. So it looks like we're going to test this 10-day moving average resistance again. It's at 115 and dropping, and if we turn that level into support, we should see a bullish MACD cross with it. So we need to be cautious if we're bearish on the dollar, because it looks like the bulls are going to make another attempt at that resistance, but we could very well just see another lower high and then a clear break of that support. So it's going to be a very interesting next week, early next week for the dollar. But as of right now, 99.43 support still holding, 10-day moving average resistance dropping, and that 10-day moving average has rejected the price over a half dozen times in the past month. So looking at gold, we are rejecting from 1220 again, same story. Although we broke it, we did not close above it, so that resistance line is still rejecting the price. So even though that higher high was hit on the daily chart, as far as the bulls are concerned, they did not turn that level into support. So it is a potential bearish reversal inverted hammer with this long upper wick of profit taking. But if we zoom in and look at the hourly chart, the bulls are still all right with this action. We're still holding higher lows. I'm looking at 12.11.63 and then down to this uptrend line, which is still holding as well. And the must hold level, I would say, would be down at 11.98.06, this long lower wick. So bulls still holding up on the hourly, just not the kind of close they wanted on the daily time frame. And for some perspective, we haven't really been looking at the weekly as much, but even though this is a very strong move, we got the consolidation I was looking for. It only lasted 1 week, but we bounced off 1180, established a key support level, and then we're moving to higher highs. But it's the overall downtrend we need to be aware of and keep that eye on that level. It's very clearly still seeing lower highs from the summer, and the bulls would have to get over 1280 to break this downtrend resistance line. So the bulls are absolutely in control in some of the shorter term time frames, but zooming out to the longer term, they're going to have a lot of work to do to change this trend, which hit the top back in the summer. So we're going to keep that in mind. Very strong bounce, continuing to show strength, but overall, lots of work to do. So the hourly time frame, we're watching for the higher low pattern to continue. So gold holding up just fine, but the dollar is holding up just fine as well. We know the market is holding up just fine. If you're watching SPY, day after day, it just keeps closing above the middle Bollinger Band, keeping the bulls in control on the daily time frame. The number one thing that the gold bulls and the miner bulls want to see is the S&P 500 lose that middle Bollinger Band daily support at the same time that the dollar is losing 99.43 support. So GDX, gap up open, indecision candlestick at the top of an uptrend. A doji is a bearish reversal candlestick, but the fact that we're above the upper Bollinger Band and holding that at 24.27 is a good sign for the bulls. If we were to break the low of today, 24.21, we would look to head back down and fill the gap and see some consolidation. But again, overall, higher low, higher high pattern on the daily has never broken. We keep forming these higher lows, and now we have our higher high with that strength today. And the weekly time frame, if we close above this 50 week of 24.15, that's going to show a lot of strength. And a pattern that I'm watching on these miners for the weekly, we've seen a higher low every single week on this bounce, 6 weeks in a row now. So higher lows maintained, bulls still very much in control. And let's check the junior miners, GDXJ. Same thing, gap up open above the upper Bollinger Band, and we have the 200-day moving average there now as well. It was resistance for a while, now it's acting as support. 38.62, 38.44, and the bulls holding control. Weekly time frame, very strong candlestick so far this week, and the same thing with the higher low pattern. 6 weeks in a row, higher lows on the weekly time frame. So resistance from here is going to be up at $40 psychological, and 41.43 would be a big key level because that would begin to break this lower high pattern on the weekly time frame and start to affirm that the bulls are reversing the trend. And for GDX, that level is 25.86. So still a bunch of work to do for these bulls, but they are holding strong. And now they're above the upper Bollinger Band. Those tight Bollinger Bands were a bit of concern for the bulls, but with them as support now, and with them being back tested and holding, as of now, that is a good sign. We've got some bullish MACD crosses after a quick little bearish MACD cross. Now the bulls looking to see some follow through to the upside. So what I'm going to be watching overnight, dollar support 99.43, gold higher low pattern on the hourly. Let's see what silver's up to. Silver's rejecting from some resistance as well of 1760. It is a bearish reversal inverted hammer, so we'll be keeping an eye on that as well. Oftentimes we can get some subtle clues by keeping an eye on both silver and gold and watching the correlations they have together. So that's what we got headed into tomorrow. We'll check back in over the weekend to wrap things up, but gold bulls and the miner bulls have to be pleased with how this week played out, especially with the question mark of FOMC. So thanks for watching. See you tomorrow.